The host of Wall Street Week, David Westin, joining us as he does every day at this time. And David, I know we've all been focused so heavily on bank earnings, the big bank earnings. We've gotten basically 5 of the 6 largest, but the community banks, the regional banks, really in focus this time around.
Exactly. We've been talking about the big money center banks. We've talked about the regional banks, but we haven't talked too much about the local community banks. So it's time to do that now, and we're delighted to have Darrin Williams with us. He's the CEO of Southern Bancorp. It's a community development financial institution based in Arkansas. Darrin, great to have you here. First of all, let me ask you the most direct question. In the aftermath of Silicon Valley Bank and all that came after that, how did it affect your business?
Well, at the heart, it didn't affect our business much. Our customers were concerned, and those that we knew might be concerned, we reached out to them. The beautiful thing about a community bank, a local bank, we know our customers intimately. And so those that we needed to, we reached out to. And we had some questions. Are my deposits safe? And the answer is resoundingly yes. The failure of Silicon Valley Bank and other banks, it's a failure of banking 101. It's a managing assets and liabilities, right? And so we don't have more than 90% of our deposits held to maturity. We don't have more than 90% of our investments held to maturity, or deposits that are above the FDIC insurance limits. And so we know our customers, we know how to protect them, and we're doing a solid job. And it's caused unnecessary angst, but we're trying to relieve those fears.
A lot of concerns, as you suggest, about withdrawal of deposits. And we've seen deposits go down at a lot of banks. Did you lose deposits because of this?
Yeah, fortunately we didn't, again, because we know our customers, and we're on the phone and we call them, and we let them know that their deposits were safe. And one thing we're actually seeing, are seeing people who care where their money spends at night. They want to bank with an institution that is mission focused, that's focused on serving the real economy, and so we're actually gaining some deposits. And so I know that's not true across the board, and I'm a little concerned about some of the deposits running from your regional and community banks, but that's not what we faced.
What's the percentage or the share of your deposits that are with businesses versus individual customers?
Yeah, so the beautiful thing about a community bank, at least for Southern, the core of our deposit base really are the folks in the community. And it's a mix, but what's important, though, above $250,000 in Silicon Valley Bank, they had, I think, about 85-90% of their deposits above the FDIC limits.
Right.
We had like 13%.
Okay.
But even those that were above FDIC limits, there are ways to ensure and protect those deposits, both consumers as well as businesses. And so we engage in reciprocal programs where I can take a large deposit and reciprocate that, or basically syndicate that across a number of community banks to provide that protection for businesses.
Have you gotten inquiries about that for those folks who are above that 250 limit?
Absolutely. And in fact, we had one person who came to the bank and had about $4 million on deposit and was concerned. And we let them know, look, you got you in a reciprocal product. All of your deposits are insured, and things are fine. Things are fine.
There are some who are proposing that we really increase the level of insurance, well above $250,000 to $1 million, or even beyond that. What do you think of that?
Yeah, I think that may be a smart idea, right? In an effort to relieve the fears and calm the fears so it wouldn't be more run on the banks, what the federal government did in saying we're going to protect all the depositors of Silicon Valley Bank, was smart. But what it did, it actually created this idea that some banks are safer than others, right? That some banks are too big to fail. I think community banks, we're too important to fail because we're banking Main Street. And if we don't have the deposit base, then we can't lend to the small businesses that we lend to who actually create the jobs in America.
Darrin, do you have any concern at all that the government starts guaranteeing all deposits, no matter how limited, how big they are, that they'll start getting into your business more? Because typically when the government gives you something, they ask for something back.
Right. Well, clearly that's a concern, and we'd rather not have that. But we want to ensure that our customers feel safe because it is important that the community banks have those deposits, because that's the base of which we use to lend to small businesses who create the jobs in America. And so we're pretty excited about these opportunities that we see coming from this. We want to relieve our customers' fear, but at the heart, America's economy needs a diversity of institutions. Not every community has a large money-centered bank. So in 7 of the markets we serve, we're the only bank in town. In 6, we're one of only 2. So that's 13 markets where there's not much choice. And the banking space is consolidated. So 15 years ago, there were, 15,000 banks in America? Today, 4,500. So we're serving people who often are not served well by large banks because they're just not present.
Well, and your sentiment is shared even by the big bank CEOs.
Exactly.
We've heard from J.P. Morgan, Jamie Dimon, Brian Moynihan, who basically said exactly what you said, that the role that you play is important because it's a role that they don't necessarily want to play. But to David's point too, if we do get to the point where we are seeing an increase in deposit insurance, that of course is also going to mean an increase in the fees that have to be paid. Are you prepared for that?
Well, we're prepared for that. No, we're prepared for that. Now, clearly that's not saying we want that. And I will say that you're right, the larger banks, Brian Moynihan, Jamie Dimon, JP Morgan Chase, Bank of America, but also large regionals like Simmons Bank, like Regions Bank, like Cadence Bank. Those are banks who have invested with us because we serve a unique need. And we need to be there, and they need our partnership. We need theirs, and so it works well.
Is there any concern here about, I guess, being able to stand alone? There's been a lot of speculation about even more consolidation as an outgrowth of the crisis here. Is that something that's on your radar?
Sure. It's on my radar, and it's a concern for the consumers that are affected. But when you have this consolidation, usually somebody's left behind, right? Usually these large institutions have to leave, just for efficiency's sake. Smaller, underserved communities that often have been systemically denied access to capital. And in a capitalistic society, if you don't have access to capital, then it makes it tough. And we know that for businesses, the further you are away from a bank, the more it costs you to do business. And so we need the diversity of banks in this country. And I believe that banks like Southern, CDFIs, and MDIs, we serve a unique purpose, really trying to address those who've systemically been denied access to capital.
So explain that a little bit. I mean, you're in the delta of Arkansas and Mississippi. So you're on the ground really experiencing this. Why couldn't a Bank of America actually do a lot of what you do? They have branches all across the country. They do a lot of local banking. So why couldn't they come in to the Delta in Mississippi actually and do a lot of what you're doing?
Yeah, so it's an efficiency model for them, right? So we're in communities, in 73% of the markets we're in, the counties are less than 25,000 people. And so, that's not the business model of a larger institution. That's our business model. That's where we should be. That's where we want to be. And I'll tell you what it means. So I'll give you an example. Jennifer Williams, one of my customers, who at one time she had 9 different payday loans. So oftentimes I'm not competing with a bank. I'm competing with a predatory high-cost provider. She had 9 different payday loans. And we're not just giving access to capital. We're teaching and training people. So we brought her into one of our financial education programs. We helped her on her journey. She now no longer has any payday loans. She's now living in a budget, and she's able to make it. I'll give you countless examples. The Timmons family, they went to 6 large banks to support their business with a business loan. Each one of them denied them because we have a relationship. We look beyond the credit box. We look at the character. We look at we know their business. We go to church, go to school with these folks, and so we're able to give that customer a loan, and her business is thriving.
Darrin, you have your finger on the pulse of a good part of the local economy down in Arkansas and Mississippi. How's it doing? I mean, how are people doing on defaults for loans you're going to? Is there much demand for loans? What are you seeing in the economy down there?
Yes, so you're starting to see some challenges. So our business customers are doing well. But as much of the stimulus money has kind of washed its way through the economy, you're starting to see, not a systemic problem, but you're starting to see some issues with your small customers, your consumers, who often are the most impacted during downturns. And so we're seeing a little uptick in delayed payments, but we're working with those customers to help them make that time work. And so we are concerned, and I don't think that it's over yet. Inflation hits those who are at least able to afford it hardest. So they're paying more for groceries, more for food, more for gas, and so we are concerned. So we're seeing a little.
Are you anticipating a peak in rates here?
So I don't want to start guessing what the rates, what the Feds are going to do. Feds are trying to shoot at 2% unemployment, right? And we're not there yet. And so to get there, you probably have to keep rates higher, longer to drive it down. So unfortunately, you may see some additional rate hikes, but hopefully we'll see an end to these increases soon.